The purpose of these sections on valuation is much more to demystify some of the terminology and to highlight some of the methods that are used by analysts and portfolio managers and market professionals to determine the value of stocks, and also to demystify the terms that are so commonly used in the financial press with respect to companies and with respect to securities. That is much more the purpose of these videos than it is to encourage people to conduct valuation of individual securities themselves, or to use these methods to make decisions regarding securities. The reason for that is that there are very, very strong arguments in developed markets that markets are very efficient. And going back to the sections on market efficiency means that conducting stock analysis and conducting analysis on individual securities does not typically, or studies have shown, that does not lead to outperformance of an index or benchmark, because so many people are trying to do it, because it is so difficult, and because there are so many uncertainties related to companies that are difficult to assess. So over time, over longer periods of time, in aggregate, no single market participant will be able to pick that stock or those stocks that are going to outperform the index. And although one will get it once, another one will get it the next time, and therefore the winners are spread among so many market participants that everyone has a few winners and everyone has a few losers, and that ultimately, because of fees and costs associated with trying to pick the winners and losers, that the exercise is a futile exercise. And there's a lot more on this in the book, and there's a lot more on this on various websites that relate to market efficiency, and entire books have been written on this, and prizes and have been awarded for studies that relate to this topic. So the purpose of these valuation videos is really just to highlight what kinds of valuation methods are out there. They can be calculated, they can be used as a reality check with respect to companies, even with respect to investments. But it's very important to stress that there are some very strong arguments that relate to market efficiency that mean, and this is a subject that's constantly debated, but there are some very strong arguments that imply that simply conducting a valuation exercise on a particular security over time will not necessarily lead to a performance that is better than the market over a longer period of time.